Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting at the 3rd until the 9th of February 2019. As always, before we start with the charts, thank you for your time watching my video, watching my work. I hope it helps you to get better idea for the coming trading week. If you do enjoy my work and the video, please show your support back, hit the like button right below the video, and drop some feedback in the comments section. Your support, my motivation to keep doing that. Very simple. As always, on Monday I will publish the PDF to the forecast. So just come back to the video, and in the description below and also in the comments you would find the link to the PDF. So see you back on Monday with the PDF prepared. If you are new to the channel, welcome to our community. Please subscribe below, and don't forget to allow the ring bell there so you are notified when I upload a new video for you in the channel. And the last update, well, not update, but the last thing to mention before we start with the charts, on below you have the link to join our completely, fully, 100% free Telegram channel where we share trading videos, ideas, setups, articles, education, and much more. All that below in the description. So let's start. This is how we do our reviews, our forecast. Sorry, we go over the previous week to see what worked, what failed, what relevant, what irrelevant, and according to that we develop our plan in the specific instruments, if they are still relevant, of course. So basically, we always have a follow-up in our discussions. So dollar Canadian, we were looking to, where is my epic pen? Let me just open my pen, sorry. Here we go. Okay. So that was our direction. We were looking to reach the 61.8, slightly below the 200 moving average. And here we are on this week, reaching this zone exactly. So the biggest question is what's next? Now, to answer that, let's go back to the roots of the analysis. As you saw on the previous week, right? We are in a triple cycle, which means I do expect it to continue slightly lower until it reaches the 50% of the correction, based on the triple cycles rules. Could that go lower? Could that bounce slightly higher? Everything is possible. This is, after all, a market, right? And we need to follow up and see how it develops. So we are getting very close to the 38.2 retrace already, right? We crossed the 23.6 and we're almost kissing the 38.2, which is a very strong level. And not just that, we just saw it is a Fibonacci expansion on the daily chart, taking us to the 61.8 level right here of this expansion. So the biggest question is what's next. There is no signs against on the weekly. The daily starts to develop some bullish divergence, and I say some because first of all it is not ticked up yet. The MACD is still pushing lower. We don't have any false break, not the 4-hour chart, not the daily chart, so it's maybe early to make any long-term conclusions. I do expect some fighting around this area, the surrounding of 131, 130, but I still would use them for a possible sell. I believe that this area would be a fighting zone, and the moves would not be as beautiful as they were on the last couple of weeks, as we wanted and expected. So I do see here some fights, and new lows would be very, very likely affected by some bullish power. I do suspect and expect from the zone of 131, 130, which is this cube, the one that we are currently kissing and dancing around. I do expect some possible pullbacks. The best way to verify that would be to start on the lower time frame to get false breaks and higher highs, basically, right? So assume that we get here, just for example, one more false break, right, or two more false breaks, and then we start to climb higher, that would be the possible time to start looking for the short-term reversals buys. Or the alternative, which we will also see in the euro pound later when we'll discuss, is get the basically the correction of 1, 2, 3, 4, and then 4 to be broken, and that changes the trend, because now it creates 3 higher highs, 3 higher lows, and basically hints for some rally. So this is for the dollar CAD. If you were selling in the last couple of weeks, enjoy your profits. It was a very nice ride, great profit, and when you see these evidences I just spoke about to the upside, cash out your profits, enjoy them, and wait for the next big opportunity. And for those who love the scalping, it might be an interesting opportunity. So the next one on the list, also by the way, we were talking about this indicator, right, that the daily should move and become bearish, as you remember. That was on previous week, and that we got it right here, right? This is my scanner I'm using for longer term swings. Daily became bearish, and boom, we got the move to the downside. So once again, that's my plan for dollar CAD. For the pound, we were expecting to see retraces down. Personally, I was expecting to see them after some more rally and false break. That never happened, so my idea here didn't really follow, or failed in other words. That's what I wanted to say, that cleaning these stop losses on and starting to fight back. It started a bit earlier, however, my plan for the long term remains still the same. I would not be surprised if from this supportive area we are going to clean these zones once again, or maybe slightly lower, but I would still be looking for possible buy opportunities. Now, if this correction holds, then we should be expecting the daily to build for us some bullish hidden divergence, which means create a new deep low on the MACD histogram and push that slightly higher from there for us. 4-hour chart would have to fit in, and that means it will have to do some kind of bullish divergence here, and then we can look for massive buys. However, we already have divergence coming and showing its face on the 4-hour chart. So if this cube will hold and we can start the pair climbing higher, maybe it would be a good buy opportunity to jump on the train. Personally, I would not be surprised to see that correcting down to 38.2 even, which means the next supportive area around the 129 zone. But again, if we hold the 130 and we never go to create lower lows, we might get it climbing all the way from here. So for me, the pound dollar is only for buys for the longer run. That means on the short run I can skip the fight and the possible short-term sells. I would be expecting it to go and make the push to the upside later on. Don't forget, there will be discussions, rumors, and so on about the Brexit as they come. As for now, I treat them as temporary event, and I believe the dips should provide the buy opportunity, which means I would, for myself, ignore any short-term sells and look and wait for the next buy opportunity. That's my personal view for the pound dollar. And again, it's pretty harder to predict or forecast anything related to the pound simply because of the Brexit. You never know, you never can predict where the wind will blow. So don't really try to focus on a prediction, work with facts. And the facts are all these things I normally speak about, like false breaks, like the structure of higher highs, higher lows on the lower time frame, like very impressive bullish candles, and so on. The next one on the list was the euro pound, where we were expecting, after this convergence, right, and this clearance we discussed, we were expecting some kind of correction. And one of the structure we were talking about is exactly this. We wanted to see the higher highs, right? Two highs being broken, and after that get involved with the buys. This is the structure I always mention as alternative to false breaks, and here you go. This is exactly what we got. High breakout, right? So 1 2 1 2, boom, breakout, which after that, as we spoke, buy the dips and get that going, right? This is exactly the plan, and that's this structure I show you here. I just want you to remember this structure, because many let's speak about it for a moment. Many traders, what they do is when an instrument is falling or flying, the natural thing to do is to try and to guess where will be the stop, where will be the turnaround. It's called catching a falling knife or trying to stop a flying rocket, whatever it is. The idea by itself is wrong. You can't predict it, and most traders, they try. You can get lucky, definitely, and you can get the bottom and then build up your ego and say, oh, I catch the bottom or I catch the top. Everything is good. The problem with that is it cannot bring any consistency. Okay, that cannot become a default, a normal thing. It's impossible to catch on tops and bottoms, and all the indicators you would apply there, stochastic, momentum, CCI, RSI, everything would not predict the top or the bottom. It might help you to catch some and get some lucky and build up your ego. It's not something to work with technically. It's wrong by its definition, and that's why there are turning principles in the market. Of course, sometimes you would find random moves like crash and rally. That happens. Against the random moves on the market, there are no tools. No one developed any tools. There is no such thing tool for that to predict such reactions. But on 99% of the times, the market behaves more technically, and the technical reversals are exactly the ones I try to show you week after week. The false breaks and the principle of turning around higher highs or lower lows, or this structure, which is the definition of the trend. So this is what I want you to remember, right? Trend is defined when you have more than two higher highs and higher lows. Simple. So if you get 1, 2 and a breakout, that might be some kind of a trend here. So going back to the euro pound, the biggest question is what's next. We got our short-term rally. The biggest question is what's next. Down we have the convergence from the weekly. So from my point of view, as long as this area holds, we should be focusing on sell the rallies. Daily chart might go dance around this area, and that's pretty much what I would suspect and expect to see here. We might get some bearish hidden divergence on the next coming days, maybe more, maybe a week or two. Get some high here, and then beautiful continuation down. And as per the 4-hour chart, we got ourselves here a kind of a triple cycle, which means we might face some corrections here. I would not be surprised if we get one more push, and if we do, that's the one I would want to go and to sell. So basically we have several important areas for that. One area is here, the other area is here. That's where I would be looking for the sell setups to form for the longer term sells. Okay, that's for the euro versus the pound. Now the dollar yen, we wanted to basically see lows, and we wanted to see lower lows, sell the rallies. We got that pretty much exactly as we wanted. Lower lows, sell the rallies. But on Friday, after the non-farm payrolls, it turned around. Now here is my concern with that situation. Well, first of all, it was a very nice push to the downside, but now look what the market is trying maybe to build for us. Some kind of a triple, maybe double scenario with one more push before the crash. And here is my concern with the dollar yen. This is why, as for now, I will move neutral, is the fact that we are crossing through 61.8 of this move down. Suspicious sign. Holding here would basically mean neutral, because there is a chance that the daily chart is simply rebuilding to the double wave before the crash. Very serious possibility. For me, it's basically at this stage neutral. I want to see more signs as for now. Now that's what we call random market, right? Random market moves. With that we can't do nothing. There is no divergence against. There are no predictions for that situation. News, sometimes on the short term they change the view. That's what happens. Does that change any of the longer term? No. It just changed the timing of the next possible setup. So dollar yen, I move personally neutral. Tricky to me. Next one on the list, CAD franc. We expected that to, after this breakout, to continue higher and reach the next important levels. Let's take a look. What do we have on the CAD franc? So that was our breakout. Oh, sorry for the breakout, and we got the retest, and we got ourselves the rally as we wanted, and we reached great level. This becomes the clearance zone. The biggest question is what's next. Now we do need to be careful. There are few trend lines waiting for this pair on this area. The zone of 0.76 out up to 0.77 becomes critical. I expect some retraces down before the next push to the upside. And on the 4-hour chart, we should be paying attention to this divergence developing, and we might start to see some bearish evidences. What kind of evidences? Exactly like what I showed you before. The false breaks and the lower lows, right? Something like that. False breaks, lower lows, or, and you already know it, right? The principle of trend, bearish trend, 3 lower lows, 3 lower highs. That could be 4-hour, that could be even after the 1-hour, once the daily and 4-hour chart become divergences, and so on. What another thing we can pay attention to is some good daily candle pattern, because we might go here and then get some beautiful engulfing or kicker or a hammer or harami that will start eventually the retrace on this area. So CAD franc, I would cash out majority of my profits, leave partial to run with the monthly and the weekly bullish evidences, but basically I would not be surprised if this would become a fighting zone before the next bullish run. Next one on the list was the Aussie versus the dollar with the crystal ball statistical and the bounce. We expected to see a rally, right? Trendline breakout and one more push. We wanted to get this done, right? So Aussie dollar, where is my Aussie dollar? Here. Aussie dollar, we got that going. We got the rally. We are kissing the 200 moving average. Wow, my mouse sometimes drawing here. Sometimes I move it too fast and the line goes so ugly. So we are on the very top of the channel here. There is still no daily divergence, but I would not be surprised if we would fight some. So for me, Aussie dollar, job done. I still remain long-term bullish plan. I still think we are going here. So basically, that's my personal view. If there are fights, I would be looking to buy them. If there are retraces, I mean, that's a very strong supportive area which might go and create a buy here. The next very important supportive area would be slightly lower, and if we reach it, of course there is one in the middle, I would say medium strength here. That's the levels I would be looking for bullish evidences, bullish divergences, candle patterns, bullish structure of the turning principles, and so on. That's my Aussie dollar. Pound kiwi, we are after the correction to the downside on the short term. And here we are. Same principle, my friend. Same principle. 1, 2, 3. Boom. Breakout. And here we are. Right? So this is pretty much what you can say here. After these lows, right? low, low, and continuation. That's always the structure we follow for the logical of sell confirmation. Again, think about it this way. Many traders would always try to catch the top and the bottom. Think how many traders try to do it here, here, or here, right? Several times you try, you would fail. The next time you don't try, the next time it works. Now again, you might get lucky, but don't try to make it something as a strategy. Not smart. Trust me. Been there, did that, failed so many times, I can easily judge that as a gambling. So what's next? The long-term plan remains bullish for me. I'm only after buys here. I would definitely want the daily to become again bullish. The daily starts to form some bullish hidden divergence here for possible rallies. I would want to see 4-hour chart fits in here. So it starts to show some divergence possibilities. I would be wanting to see something like that with clearer signs, right? And a rally. Or alternatively, if this bottom holds, then same principle of trend change and returning all the way up again. Okay, so this is my view for the pound kiwi. Short term, paid to the downside. Time to get ready and look for these long-term buys we were talking about. Next one was the euro versus the Aussie. After a lot of discussion, that's what we had in mind. As long as this top holds, we expect one more low. If this top would not hold, right, we would be wanting to sell versus this top later and expect one more low to the downside. And here we are after the drop, right? This bottom holded and boom, we got here and we got paid. That was a very nice move of about 150 pips to the downside. And the question is what's next? I still remain in the same view for the long term. I am only after bearish plan. So for me, sell the rallies. Now the daily chart is the one we need to pay attention to. No divergence yet, so we can expect it to go lower. But if that will turn to be divergence, if it will turn to be divergence, retraces a bit and then deeper sell. So the plan for the long term is still same. Now before we move to the commodities, one more additional to this week. New Zealand and Canadian. Now, by the way, before we move on, very important to mention, if there are instruments that are not covered, it doesn't mean I will not trade them during the week. It means that while I create this video, I see nothing clear. That's all. So I try to cover all these that are clear to me, and all the rest I discuss in my live trading room on daily basis inside the Traders Academy Club. So if you are not a member in the Traders Academy Club yet, I invite you to join us. To join right below in the description, you would find a Traders Academy Club link, and join us in the live trading room to trade all these instruments that develop during the week and provide these opportunities. Okay, so I'll see you inside. New Zealand and Canadian, here is what I see. I see here a triple cycle, therefore I do expect it to play around the 50%, therefore I'm after sells. Very simple, we can see here lower highs, lower low structure. Daily is a bearish hidden divergence between these two highs. Therefore, I would expect a continuation. And now the daily chart joins the same direction, with making a bearish hidden by itself. We also here are exposed to a fake breakout. Beautiful engulfing pattern right here after a false breakout. You can see several, you see here, several spikes on the top. That gives us a good understanding that the bulls are weak. Classical resistance zone. Anyway, lot of confirmations here, so I would expect a move down. Now the only thing I would pretty much prefer to see here is the creation of lower lows. because then it should be very beautiful scenario of the confirmation for a turn around. False break, right? So second in a row and lower lows. That will be pretty much classical. Sell the rallies after that should make its work. The next thing was gold, when we were wanted to see that going through 110 to clear that, and gold did that exactly for us. Boom. Right? The level is clean. The biggest question is what's next. The way I see that, we are here at the end of the cycle with a divergence developing here. So I do think the gold is about to make a retrace area. Critical zone we have here. I would expect to see some kind of correction before the fly. Now on the, we need to time that, because remember, the reversals don't happen just because we think they will. We need to see the structure of a reversal. So that could be false breaks and lower lows, and then sell the rallies, or the structure of lower highs, lower lows, and a bearish trend to start and develop. Okay, pay attention to that. This is what we want to see happening before we start talking about the sells. Silver reached our, basically made our plan as well, and now doing the same scenario. We have kind of sorry, wrong drawing. Triple cycle here. No specific critical levels here, but a very psychological 116. We have this doji of a fight, representation of a fight, and the divergence sticking down here. So I would not be surprised if we see a drop before the further move to the upside. That's my plan for the silver as well. And the DAX, our plan was and remains short and retraces. Where did it go? Here. Retraces down, one more rally, and here we go. Okay, so we're playing here still inside this zone. That could be something like that before a rally and a sell, or we could here dance in a range before one more rally and longer term sell. This plan was not changed, so that's pretty much it. The new one to the additional part is the Nasdaq. Again, according to the monthly chart, we are after sells here, expecting to double leg, right? The first leg was here with this convergence, so the expectations would remain the same. And this is why I do think that this leg should finalize itself, and this area we should be looking for sell setups to start and to form and to develop. So my friends, that's pretty much all. Once again, I will ask for your support. If you enjoy my work and my video and find it useful, please hit the like button, drop some feedback below. It helps the community and the channel. Thank you very much in advance. And on Monday there will be the PDF. Come back to the video, and in the description and the comments you would find a link to that. And that's all. I'll see you in the live trading rooms. If you would like to join us, please go to the description, Traders Academy Club. I'll see you there. Thank you and wonderful trading week. Yours, Vladimir Ribakov, Traders Academy Club.